Today, we are strapping in for, well, a look at an economic transformation that's really defined by speed, scale, and a whole lot of concrete.
A historic amount of concrete.
Right. We're talking about Saudi Arabia, and specifically this really tight 4-year window between 2026 and 2030.
hmm
And the sources we've gathered, they don't just call this a building boom. They're framing it as the most intensive construction cycle in the kingdom's history.
And that intensity, it's driven by a calendar that just isn't flexible. It's non-negotiable.
Yeah.
We're looking at an estimated 500 billion, maybe even up to $700 billion in active projects,
700 billion.
potentially. And they all have to be substantially delivered by the end of 2030. And to give you a sense of that number, $500 billion is roughly the entire annual GDP of a country like Sweden, all being spent on construction in 4 years.
That is just a staggering commitment. And, if the scale doesn't scream urgency, deadlines certainly do. It's not just about building cities, it's about hitting these very public fixed dates.
Precisely. The pressure comes from two major global commitments that are sort of converging right now. You have Vision 2030, which is the big national economic diversification strategy.
Okay.
And that requires the kingdom to pivot from planning construction to actually generating revenue from operations by 2030. But then you have the really immediate hard dates.
The events.
The events. Expo 2030 in Riyadh, which demands full infrastructure readiness by the middle of that year. And then you have the early enabling works for the FIFA World Cup in 2034, which have to start now.
So that window, 2026 to 2030, it really feels like the final turn on a very, very high-stakes racetrack.
It does.
If these core assets, the hotels, the infrastructure, the first commercial zones, if they aren't delivered on time, the whole diversification strategy could, fall short.
It absolutely could. This period isn't just a peak, it's the critical final execution window. The success of Vision 2030 really hinges on transitioning these construction sites into functional, operational, profit-making assets. And fast.
So our mission for this deep dive is to distill the core projects, figure out how that $500 billion market is broken down by region, and then, and this is maybe the most crucial part, analyze the delivery models needed to pull this off. Let's figure out how they plan to turn these blueprints into a functioning economy. Okay, let's unpack this enormous market. When we look at the financial breakdown, where's the largest chunk of that $500 billion actually going?
Well, the sources make it crystal clear. The Giga mixed-use developments, they just dominate the pipeline. We're talking over 40% of the total investment.
And these aren't just like big buildings, right?
No. These are entirely new cities and economic zones. They're designed from the ground up to diversify the industrial and tourism base.
And these huge projects, they're not scattered randomly. They're focused on specific strategic hubs. So if NEOM is the face of Saudi Arabia's future, that experimental, tech-driven model, how much of this immediate construction is actually focused there?
EOM is the single largest contributor by far. The Phase 1 investment alone is over $170 billion. Wow.
So we're talking about an immense logistical challenge that is, already well underway. For this 2026 to 2030 window, the focus shifts sharply from just planning to executing the backbone infrastructure.
The really heavy stuff.
The heavy stuff utilities, transport, massive earthworks, and delivering the very first operational zones.
Which means making things like the line, that linear city concept, actually real, at least in its initial parts. And then there's the industrial hub Oxagon, the mountain resort Trojena.
And the luxury island, Sindala. Yes.
Yeah.
It's a mind-boggling amount of concrete and steel being managed all at once.
How do they even do that?
Well, the ambition requires entirely new construction methods, especially for the lines. But while NEO is handling that future tech side of things, the capital, Riyadh, is simultaneously undergoing its own massive transformation to anchor the present.
Okay, so how does Riyadh's investment compare then?
The capital is anchoring the national transformation with over $145 billion in its own Giga projects.
So nearly as much as NEO. Nearly. And Riyadh's role is to solidify the kingdom's position as a world-class capital and a global aviation hub. This transformation is really visible with projects like King Salman Park and New Murabba. They're creating a new downtown core, a new public space, all intended to drastically improve quality of life.
And I assume the expansion of the King Salman International Airport plays a huge role in that whole positioning, doesn't it?
It's absolutely crucial. That airport expansion, combined with critical city projects like the metro extensions and the Sports Boulevard, completely transforms Riyadh's functional capacity. It has to. It has to handle the massive influx of business and tourism that Vision 2030 is designed to attract.
So we have Neom pushing the tech limits and Riyadh handling the global finance and aviation hub status. What about the tourism revenue stream? Where does the bulk of that coastal investment fit in?
That's split into two distinct but complementary strategies along the Red Sea coast. First, you have the dedicated Red Sea tourism cluster.
Red Sea Global and Eyeball.
Exactly, with a combined investment of over $60 billion. This is purely focused on premium, year-round, luxury, and ecotourism.
And we hear a lot about sustainability being kind of baked into those Red Sea designs.
It's non-negotiable there. Their designs emphasize minimal environmental impact, reliance on renewables, and protecting the coral ecosystems. It's a very specific, high-value, high-margin tourism model.
Okay, so that's one strategy. What's the other one? The traditional gateway, Jeddah.
Yes, Jeddah is undergoing nearly $50 billion in urban regeneration. Its focus is on renewal projects like Jeddah Central, which strengthens its role as a key commercial tourism and logistics hub.
It's the main entry point for the pilgrimage too, right?
It's the primary entry point for millions of pilgrims every year, so its infrastructure is just vital to supporting all the other regional growth we're seeing. Now, it's really easy to get caught up in the skyscrapers and the fancy resorts, but we need to talk about the social assets. The sources highlight over $60 billion allocated to social infrastructure, healthcare, education, cultural assets, and really important housing programs.
That is such a critical investment.
Yeah.
Because ultimately, you need people to actually live in and run these new cities. You can build the most beautiful infrastructure in the world, but if nobody wants to live there,
Yeah,
it fails.
exactly. This spending is directly linked to human capital development and livability. The housing programs, for instance, specifically target achieving 70% home ownership.
Why that number?
Well, that provides stability for the local workforce, which is fundamental to transitioning from being a construction site to a long-term viable economy after 2030. You have to build communities, not just monuments.
And building viable communities relies completely on what's underneath them, the foundational infrastructure. Let's transition to the systems running under these new cities. I mean, the investment in energy, utilities, and water must be colossal.
It is, and it has to be delivered at the same pace as the buildings themselves. This means massive investment in grid expansion, advanced desalination plants, and next-gen systems like district cooling, which is just essential for livability in that climate.
And the sustainability mandate ties directly into this, doesn't it?
Yeah.
Especially the energy part.
Absolutely. It's an operational necessity. The commitment, for example, that NEOMAM will operate entirely on renewable energy requires immense investment in solar and wind capacity and, crucially, grid resilience.
So how do they fund all that? The government can't do it alone.
They can't. They're attracting private capital through some pretty sophisticated funding mechanisms.
Which brings us to those technical terms that define how this stuff is paid for. IPP and PPP models. Can you just quickly break those down for our listeners?
Certainly. We're talking about independent power producer, or IPP, and public-private partnership, or PQP. Essentially, these mean private companies finance, build, and often operate major utilities like power stations or water plants for a set period. This is crucial because it offloads that initial capital risk from the government and ensures these systems are built with operational expertise from day one.
That structural work has to move at breakneck speed, and the timelines are absolute, dictated by those global events we mentioned. So let's revisit Expo 2030 in Riyadh.
Expo 2030 is the immediate, non-negotiable time anchor. The purpose-built site requires full transport and utilities to be live by mid-2030. That puts tremendous pressure on everyone.
I can only imagine the scale of coordination. Over 150 international pavilions, all on these super compressed, fast-track schedules.
It requires simultaneous planning for rapid execution, and the legacy planning is just as important. Post-Expo, that site needs to transition smoothly into an innovation district and a public park, so the initial design has to accommodate that second life.
And while Expo is just a few years away, the FIFA World Cup 2034 commitment, that demands action right now. It's pushing project starts into this 2026-2030 window.
Correct. While the final delivery for everything extends past 2030, the commitment to host involves over 15 stadiums across multiple cities. To meet FIFA standards, the sites need immediate design work, enabling works. the start of heavy construction.
And all the infrastructure around them.
Crucially, the associated transport networks and hospitality infrastructure must also be accelerated to ensure the entire country is prepared to host a global event of that magnitude. Now, let's pivot from the what and the when and talk about the how, the actual delivery. What's fascinating here is the sheer complexity of the synchronized ecosystem required to pull this all off at this pace.
It sounds less like a collection of individual projects and more like a national operating system for construction.
That's a great analogy. The system starts with the owners and developers, who are primarily sovereign entities backed by the Public Investment Fund, or PIF.
So entities like NEOM and Red Sea Global.
Exactly. They set the vision, secure the financing, and they orchestrate the delivery schedules at a national level.
Okay, so what about the people actually pouring the concrete, the contractors? Is the kingdom relying mainly on local firms, or are they bringing in international players?
It's a strategic blend. You absolutely need the strong local contractors for their regional expertise and their ability to mobilize resources quickly. But these projects demand global standards and specific, often cutting-edge, technical skills that often only the international Tier 1 players have.
So how do they combine those two strengths in practice?
Through the widespread use of joint ventures, or JVs, this structure is essential. It pairs the mega project experience of the international firms with the local regulatory understanding and, supply chains of the Saudi firms. This isn't just about sharing risk, it's a mechanism for mandatory localization and knowledge transfer.
And to manage all that complexity, especially with the tight timelines, you need the world-class project management consultants and designers, right?
Right.
They're the ones controlling the budget and the risk.
Absolutely. The world-class architects are the ones who translate this massive ambition into buildable, iconic landmarks. The international engineering firms deliver the complex sustainability and infrastructure solutions. Their role is critical in making sure that speed doesn't compromise international standards of quality and safety.
When you have this much work on such a tight deadline, traditional contracting methods can be too slow. So what procurement models are they using to maximize speed?
The dominant models prioritize speed and certainty through single-point responsibility. So we see a heavy reliance on design build and EPC engineering, procurement, and construction contracts.
So instead of having a separate architect, then an engineer, and then a contractor, one entity takes on the whole process.
Exactly. It just accelerates decision-making and project flow. And a crucial strategy to speed up these huge giga projects is to break them into multiple smaller packages. Instead of awarding one massive $20 billion contract, they'll award $21 billion contracts,
Allowing them to build in parallel.
allowing parallel construction activity all across the site. Now, the scale and the pace, they inherently introduce enormous logistical risks that have to be managed. Given the velocity of the work, what do you think are the three main threats to that 2030 deadline?
I would have to assume the basic elements of any massive build.
Yeah.
Workforce shortages, the reliability of the global supply chain, and then just schedule compression threatening quality.
Those are precisely the three. Workforce shortages require early and mass mobilization of personnel and, housing for them. Supply chain volatility, especially since the pandemic, is being mitigated by investing more in local manufacturing and procurement hubs inside the kingdom.
And the schedule compression. I mean, when you're rushing, that's when mistakes happen. How do you mitigate that specific risk?
They are leaning heavily on modular construction techniques. This allows large segments of buildings, even entire rooms, to be built off-site in a controlled factory environment.
Huh.
This massively improves speed, consistency, and quality control. It helps de-risk the aggressive schedules. And above all, maintaining strict health, safety, and environmental HSE standards is really the only way to prevent major delays or catastrophes on the ground.
So this 2026-2030 cycle isn't just a boom. It is genuinely a once-in-a-generation opportunity for construction, manufacturing, services, really, worldwide. The biggest opportunities are clearly in those giga mixed-use projects and the high-value roles in transport and utilities. For any firm watching this, success seems to require decisive action, a strong local presence, and powerful partnerships.
And if we connect this all back to the bigger picture for you, the listener, the ultimate relevance of hitting these 2030 deadlines is the kingdom's economic transformation itself. Success means Saudi Arabia transitions from being defined by its construction sites to being an operational, revenue-generating engine one driven by services and tourism, moving away from its traditional reliance on oil. And that transition doesn't just rely on the impressive architecture, or the massive roads being built. It relies on building up the people to inhabit and run the country. That strategic goal of hitting 70% homeownership, it shows that the entire vision is fundamentally dependent on building human capital, not just spectacular cities.
And that leaves us with a provocative final thought for you to mull over. We've seen the extraordinary scale of investment in foundational systems, renewables, advanced desalination, massive district cooling networks. The real long-term measure of success for this decade of furious construction won't be whether the line is finished on time. It'll be whether these vast, state-of-the-art utility systems can actually sustain the new populations, the industries, and the extreme environments they were built for, not just in 2030, but 50 years from now. That's the true test. Thank you for joining the deep dive.